For over 2 years, we have been wondering when will everything crash? Well, the last 6 months prove that has started. Raising the rates by 1 or 2% is more than enough to crush the booming stock market. Many companies that doubled their stock prices throughout the pandemic lost all of their gains and are back to the pre-COVID era. Whoever sold before the crash must have profited enormously. But a stock market crash is not a big deal since most of the stocks are owned by the top 10% of Americans. However, when real estate prices crash, everyone suffers since everyone has a roof over their heads. House prices increased by over 10% in 2020 and almost 20% in 2021. We hadn't seen such price hikes since 2005 or 2006, when the housing market was heading into a crisis that would take down with it the entire economy. And since the Fed is raising the rates, house prices are crippling. So the question that many have been asking is, will the 2008 housing crisis repeat itself? Are we headed into a similar crisis? And how bad will the crash be? We will answer all of these questions and many more. But before we do that, give this video a thumbs up and let's dive in. The current crisis is unlike the 2008 housing bubble. The 2008 housing bubble was driven by different factors. Loose banking regulations led to overrated mortgage-backed securities that were issued by rating companies. Junk loans, or the loans that have the highest chance of defaulting, were mixed with good loans and were given AAA ratings. Investors traded these securities based on the narrative that these are stable, great loans that are insured by giant financial institutions such as AIG. But the moment some of these loans began to crack, it was like a domino effect that led to the crash of the market and bankrupted giants like Lehman Brothers or AIG. But the current housing bubble isn't driven by junk loans or fake AAA ratings, which is leading many to believe that the housing market is fine. However, what we also have to take into account that there are no two identical crises. Each bubble or each crisis is different. Once there is a crisis and we take measures to fix it, we'll learn the lessons and try our best not to repeat it, at least in the foreseeable future. That's why ever since the 2008 housing crisis, taking a mortgage has never been as easy as it was before the 2008 crisis. So it will be unwise to imagine that the current crisis will follow the exact steps of the previous crisis. What we have to take a look is why house prices rose so much and what are the chances that they could collapse. If there are such indicators, then a crisis is an option. After the 2008 crash, many home builders went bankrupt since house prices collapsed and building homes was no longer a profitable business. Only the most stable companies survived the crisis. Since the government tightened banking regulations, the demand for houses dropped significantly, which made it even more difficult to sell homes. However, a lot has changed since then. Banks are of course still regulated, but getting a mortgage isn't as difficult as it was right after the crash. The housing market began to grow at an average rate of 1 to 3% at best, since supply of new houses in the United States was at a stable rate. But if you look at the data, more and more developers jumped into the game when they saw that mortgage rates were at a historic low and the demand for houses is at all-time high. Even though the pandemic created such a huge shortage of real estate, starting from 2021, the supply of new homes began to rise to the point where it's almost double the pre-pandemic level. They have begun slashing prices to be able to sell now, since the Fed is literally raising the rates at every opportunity. Higher rates means higher mortgage rates, which means lower demand. Lower demand means it's difficult to sell your house. So it's better to cut prices and sell now before the Fed hikes the rates further and makes it even more difficult to sell. Give this video a thumbs up, click the subscribe button. Thanks for watching, and I will see you in the next video.